The next person up here today is Tom Montminy, who will provide you the PwC MoneyTree data on the state of the MedTech venture industry. This is really an important and really great information that we get from PwC each year. Tom is a partner at PwC and has spent the majority of his 26 years with the company auditing both venture-backed as well as large-cap multinational and biotech and medtech companies, assisting them with IPOs, mergers, acquisitions, corporate ventures, and numerous other complex public and private and debt equity financing. Tom is currently working in Minneapolis, focusing on Medtronic, and after spending 3 years in New York as part of the company's national office. Prior to that, he spent most of his career in the Boston office, where he was the leader of the Eastern North America life science practice. Tom has served multinational clients such as Biogen, Genzyme, Waters Corp, Analogic, IDEX Laboratories, as well as numerous other mid-cap, privately held, and venture-backed companies, including Neurometrics, CardioFocus, TissueLink Medical, and many others.
We've got the Q1 2010 venture fund flow, and we've tried to stack it up with a long history here. The first quarter, you know, I have not annualized. If you annualized it, we'd be very similar to where we were in 2009. 2009 had about 2,900 deals. Q1 here, we've got about 680 compared to about 640 last year, Q1. So number of deals in Q1's up year over year. It's obviously trending down from 07 to 09, but you know, 09 was comparable to the early and mid 2000s. So not a bad answer. If you look at Minnesota, you say, well, how's Minnesota doing? Well, in the first quarter, we've only had 4 deals in the state, 2 of them MedTech. One quarter doesn't make it. I'll show that on some future slides. But again, you can see the last 3 years have trended down. Seems like bad news, but in reality, if you look where 09 was compared to some of the years 2002, 2006, it's not very far off. And I'll try and maybe put a little light on that. I tried to take the total venture market and break it up by industries. Red being the MedTech, and as you can see, it's grown and is running around the 10% of all venture money over the last 5 or 7 years. Biotech, the yellow, you know, a significant player. Software, you can see that's been decreasing over time. It's hard to understand convergence where a lot of IT is going into MedTech, and blue is all the other industries. Look at the part on the far right for those of you that are Minnesota. Minnesota has a very different mix than the national average. About 60% of the venture deals in this state are medical device. That's the good news, and maybe it's not the good news for others. The good news is it's a vibrant and deep market. The bad news is if you can only get a certain amount of dollars into the state, there's a lot of competition here amongst companies, ideas, products, fighting for that. But it clearly is the bellwether of this state's venture industry. The other piece of information that I find interesting is the biotech is that small yellow sliver. And I think this is a state, and I know Don and others are focused on it, trying to grow that biotech because of the convergence, because of the similarities. It would be really important to the future of the broader market to drive the biotech side of that dynamic. If you look at devices, medical device investment nationally, you'll see here it's running around that 10%, 10.9% in the first quarter. It was a little higher, it was up around 15% in 09. So it's capturing more than its fair share, or at least its fair share of the market of dollars that the VCs are floating. Now the pie may be smaller because the VCs deal fund has decreased, but the venture side, or the MedTech side of that in the last 4 or 5 years is capturing more than we were in the predecessor 5 years. Let me cut that down to the medical device investments in Minnesota. You can really see have increased, and the total dollars were up, you know, closer to the 300. I'm sorry, the 300 level. Q1 was a little bit small. Again, one quarter doesn't make it all. 09's down, and that's you know, again, it looks bad, but it's comparable to the 04 to the 06 timeframe. So I'm pretty optimistic that again, this market, as well as this industry, is getting its fair share and is continuing to move. And you might even argue 07 and 08 were a little bit higher than normal. Now, there were the 2 deals that happened here in the first quarter. What is it, Zyga and Hemosphere. about $15 million between the two of them. You know, good, solid companies that are running on third and fourth rounds of financing. What Don talked about, getting that angel credit, I'll show you as we come down. That's really where we need to prime that pump more so that companies can get up and running. You know, the problem here is no IPO market, M&As are slow. We're having trouble at the angel level to get things started. So a lot of the funding, while it sounds like in absolute dollars it's pretty good, I'm about to show you how it's later stage. Taking some quick snapshots, and it's hard to see this slide a little bit, but this is nationally what's been going on with all venture money on the top dollars and the bottom number of deals. Q4 to Q1, slightly down on the left side is, the left side should be the all industries, and the right side is just the medical device. Sorry, that didn't come out on the slides very well. So it looks like medical devices are actually down quarter over quarter more than they were, than the whole venture industry was. And this is the Minnesota all investments on the left and medical device on the right. Again, similarly, it's down. But that's just over last quarter. Q1 is Q1, so let's go to Q1 a year ago. Q1 of 09 to Q1 of 10, left side again is all venture funds raised, and it's up. Venture funds invested, excuse me. And on the right side, it's medical device, also up. So Q1 2010 is better than Q1 09 when I think Ralph was up here presenting to you last year. Locally, it's not necessarily up, but again, when you only have a handful of deals in a state, 1 or 2 deals can really throw off the statistics. Here's the average deal size. Again, you can see the average deal size is in the $8 to $9 million range. Very consistent over the last couple of years. And if you go to Minnesota, again, the average deal size, a little smaller than the national average, but still around the $7 million range. So Minnesota's tracking, keeping its fair share. Here's the one that gets very complicated, but what I was trying to show here is how much of that money is going to the earlier stage. Now, we don't capture true angel financings. We try and capture anything that hits the public markets or I'm sorry, the public wire or anything the venture capital community reports. And you can see a real growth in the last 4 or 5 years. So while you walk around and hear, oh, it's hard to get the early stage financing, it is at the angel, but then once you get past that, there's actually a growth in the last 5 years versus the predecessor 5 years on early stage money. Now, that could be a bigger slice of a smaller pie because it says a percentage of the funds raised. And the other interesting note, because I color-coded them, California on the bottom, yellow is Massachusetts, and the green is Minnesota. The blue is really all other states that have grown disproportional to the prior 5 years. They were only running 1 or 2%. They're now up at the 6 and 7% range. So I think the venture money is not just focused on the 3 or 4 big states, but is really chasing things all over the country, being more selective, and the angel money, which starts everywhere, is starting to filter around the country. So going way back to when the IPO market was hot in the mid-90s, 1997 was the year you saw a lot of early stage. The companies exited with IPOs, venture capital funds were being raised, money was flowing, and look at the percentages in the 20 and 30% in the early rounds. And very few were going 6 rounds of financing or later. Now we've got 30% of our funds in the medical device sector that are being dropped into stage, in 6th round or after. Obviously, if you can't get the exit strategy through the IPOs or the M&A, venture funds and others are continuing to invest in those companies because they believe in them, and that is cutting off a bit of the pipeline for the earlier stage. And hopefully the tax credit and others will help out. Good active group here. Some changes from prior years. I won't read through them, but we thought we'd at least acknowledge and say thanks to those venture funds that have been doing more deals rather than less, and there's a list for you. But I want to leave you on the proverbial positive note because there's some good news and bad news in the slide. Minnesota continues to get its fair share. Medical device continues to get its fair share. The pie is what it is. The markets can only come back, and the technology resides here. The knowledge is here. The venture community wants to invest in it. Minnesota's 4th in size of deals, 4th in size of investments. It's been number 3 or number 4 for well over 10 years now. So a very strong and vibrant community. You got to fight for your dollars, but the money is still flowing. And what I've seen in the early Q2 is that the deals are still flowing in Q2. So I don't think my prediction, the proverbial crystal ball, is 2010 will be somewhere around what 2009 was for venture deal flow. Again, it's going to be more later stage than earlier stage. We've got to solve the earlier stage. Don, with the tax credit and other things, are trying to stimulate that. But you can only get what's available and what's out there. And I think the industry's beating its fair share of the total venture funds, and this market is getting more than its fair share as well. So that's a quick run through on the state of the venture fund.